Hear me. Hello, students. So now, students, we will start third session of the CFRL. May 24, November 24, regular batch. So now, students, over here now, in the last lecture, if you can recall, we were discussing about the chargeability under the Act, and we were focusing primarily on in the assessment year, you have to do the computation of the tax liability. And that exercise to compute the tax liability will happen in the assessment year. Will happen, students, in the assessment year. In this particular context. Now, if you see very carefully, students, in this regard, if you see, students, over here, so students, in the last session that we discussed, the first two class was about the computation of the tax liability, and this exercise of the computation of tax liability happens to be in the assessment year. Happens to be when? In the assessment year. Now, as what we were discussing, students, in the last session, and you all are aware that the tax liability computation in the assessment year, you all are aware that this is a function of two factors. All of you are aware of this one, students, isn't it? This is function of, students, two factors. Which are those two factors, students? One is the total income, and the second one, students, is the rate of tax. So the first one, students, happens to be the total income, and the second one is the rate of tax. I told you about the source from where you get the rate of tax. I told you, students, about what? The source from where you all will get the rate of tax. Isn't it? In this particular case, students, the rate of tax, if there is any special income in your total income, if there is any special income in your total income, students, then in that particular case, we say that it will be taxable at a special rate in the Income Tax Act itself. That rate, students, is very much there in the Income Tax Act itself. Are you aware of that? That rate, students, is very much there in the Income Tax Act itself. Now, therefore, if any special income is there in the total income, then that special income will be charged to tax at the special rate, and the balance total income, students, and the balance total income will be taxed as per the rate which is given in the Finance Act. This is what we discussed in the last lecture, students. This is what, students, we discussed in the last session, isn't it? And that exactly is the point. So therefore, students, in this particular context, this is what it is. Now, one question, students, I just need to ask to all of you over here. One question, students, just need to ask to all of you, students, over here. And what exactly it is? That question, students, is about the fact that You all are aware in this context. That question, students, is in respect of what is the important feature so far as the special income is concerned, students? What is the important feature so far as the special income is concerned? You may be aware of it. Students, tell me one thing. If, say, for example, we said long-term capital gains is taxed at the rate of 20%. Okay, long-term capital gains is taxed at the rate of 20%. Now, if an individual earns the long-term capital gains, or say a partnership firm is earning a long-term capital gains, under section 112, the rate of tax of 20% will remain the same for both of them. The rate of tax of 20% will remain the same for both of them. All of you agree to this one? So the rate of tax of 20% will remain the same for both of them. What does it means? It means that, another example, lottery winnings. An individual has earned a lottery winning. Okay. And say for example, an HUF has earned a lottery winning. Whether the rate of tax for the lottery winnings under the Income Tax Act, that is section 115 double B, at 30%, will it remain the same? Answer is yes. That will remain the same. So what does it imply? It implies that irrespective of who has earned it, irrespective of who has earned that income, the rate of tax at 30% will remain the same. This is an important feature, students, as far as the tax at the special rate is concerned. This is a special feature, students. So here, students, if I have to tell you in this case, if you have seen the tax at the special rate over here, I can say one very important point. What is that important point, students? This context. I can say, students, over here an important particular point that in this situation, and if you want to mark this one, irrespective of what? Irrespective of the person who has earned it, irrespective of the person, the rate shall remain the same. Irrespective of the person who has earned it, the rate of tax, students, will remain the same, isn't it? That exactly is the point. But what about the rate as per the Finance Act? The balance total income, I told to all of you, the balance total income will be taxed at the rate which is there at the Finance Act. Does the rate changes? If individual has earned, for him, the rate as per the Finance Act is different. If a partnership firm has earned the income, the rate as per the Finance Act is different. If a company has earned the income, the rate as per the Finance Act is different. What does it imply? If you are taking the Finance Act rate, then depending upon the person who has earned the income, the rate as per the Finance Act will keep changing. Will keep changing. All of you agree to this one, students? That exactly is the point. That exactly is the point, students. So this is how the things has to be looked upon, students, over here. And this is precisely the point that every one of you has to be very, very careful about this particular observation. Can we proceed now, students? Now, in the last lecture, students, you may be aware of it. In the last lecture, students, all of you may be aware of this particular point. And what is that? So, in this case, in this situation, students, in the last lecture, I taught you, students, for individual, what is the rate of tax? for the individual. We have also seen the in foreign company as well in the last session, students. In this context, students. So in the last session, if you see very carefully, that individual, very important amendment for all of you. In fact, if the question is silent and they tell you to compute the tax liability, they tell you to compute the tax liability, then I have told to all of you that in such case, students, what happens? For the individual, in this case, for the individual students, what happens? 115 BAC is now the default scheme applicable for them. 115 BAC is the default scheme applicable for them. And what is this default scheme? Since under the default scheme of 115 BAC, and alternate here, the rate of tax is different from what otherwise is available to the individual under the old scheme. But that old scheme is now an optional scheme. And if that old scheme is an optional scheme, you have to opt for the old scheme. If you don't opt for the old scheme, then for the individual with in for the individual for previous year 23-24 assessment year 24-25, the default scheme will apply. And in the default scheme, how an individual will compute the tax liability? This is how you will compute the tax liability under the default scheme. So total income when he compute, I told you already, students, what is that? Few deduction of each heads is not going to be available. Few deductions. One very simple example which you can connect. Two example I will give you. Maybe many students will have a curiosity to know. So which are the deduction which is not available? So just for your curiosity purpose, under the head salary, the most common is the standard deduction of 50,000 rupees. That will not be available. Students, that will not be available if you are in the default scheme. One more example I give you. In the PGBP, students, there is additional depreciation. In PGBP, there is what? Additional depreciation. So, in the case of an individual who is under the default scheme, he will not be allowed to avail the additional depreciation and in computing the PGBP, This is some examples of the deductions which will not be available in computing the heads of income or the total income under the default scheme. More importantly, students, chapter 6A deduction also will not apply. Will not apply, students. Chapter 6A deduction also will not apply. Except what? Few deduction. Except what, students? Few deduction. Which are those few deduction that we will see later on. Okay, so that is the point. And in the default scheme, what is the rate of tax? First of all, the special income always would be at the special rate under the Income Tax Act. No change on that point. And as far as the balanced total income is concerned, on that the rate which has been given to you is the slab rate. Remember the movie time 3, 6, 9, 12, and also one more 3 hours, that is 15. So up to 3 lakhs, nothing. 3 to 6, 5, only 5, 5. 6 to 9, 10, 9 to 12, 15, 12 to 15, 20, and more than 15, it would be 30. More than 15, it would be 30 students. Now, one thing, be careful. This slab rate, again I am repeating, this slab rate is applicable irrespective of the person who has earned it. Means irrespective of the individual. The individual may be less than 60, more than 60, more than 80, doesn't matter. This is the only slab rate. The individual may be a resident or a non-resident, doesn't matter. Under the default scheme, this is only the slab rate. The other unique point was on the rebate part. Under the default scheme, do we have a rebate under 87A? Yes, provided the total income that you have computed under 115 BAC, that total income should not exceed 7 lakhs. That total income should not exceed 7 lakhs. And the next one, students, as you all are aware, is a surcharge. And so far as the surcharge is concerned, in this case, as you all are aware, the rate is the same, but very important point. You have seen that the surcharge rate for the individual under the old scheme, there are 4 rates. The old scheme, 10%, 15%, 25%, and the fourth one is 37% in the old scheme, for which you have to opt. 37% is when the total income exceeds 5 crore. Total income exceeds 5 crores. But as far as the default scheme is concerned, you all are aware now. How much is that? 10, 15, 25. Which is, if your total income is more than 2 crores, then under the default scheme, the surcharge rate for the situation, the surcharge rate for that situation of the total income more than rupees 2 crores is 25%. That is it. So if the total income is 10 crores, under the default scheme of 115 BAC, the surcharge will remain at 25%. However, under the old scheme for which you have to opt for, the surcharge rate would be 37%. Isn't it? That's exactly the point, students. Therefore, this is one thing that you should always keep in mind, students, the fundamental difference between the two, because we will involve ourselves in that particular computational process in the chapter which we are going to now kickstart. So, students, now come to this particular part of the rate of tax. Herein, come to this particular part, students, that of the rate of tax. Now, so far as the rate of tax is concerned, if you see over here, again, I have given you one example of foreign company. Why I gave you the example of foreign company? Because we are in any case going to start with the non-resident taxation. So therefore, the rate of tax, students, as you all are aware, in this case, special income at special rate. Even them, for them, doesn't change. So if a foreign company has got a long-term capital gains of 112, then that special income would be at 20%. That will not change. Okay, the balance total income for the foreign company would be at 40%. Okay, now some students will ask, sir, do they have any default scheme for a foreign company? No. Domestic company we will have, which we will see later in different module, but foreign company does not have any default scheme. Okay, individual, non-resident, will they have the default scheme of 115 BAC? Yes. That default scheme I told you already, 115 BAC applies to individual, whether he is less than 60, more than 60, more than 80, doesn't matter. Whether that individual is a resident or non-resident, doesn't matter. The default scheme is applicable for all the categories of individual. Fine, students? Foreign company, there is no default scheme. The only rate which you all know in the old rates, which is the old rate, 40% on the balance total income. That is the rate that is applicable. Surcharge is also the old one. What is that? If your total income, if the total income of a foreign company, students, is more than 1 crore, but up to 10 crores, then the rate of surcharge is 2%. And the second one, students, if the total income is more than 10 crores, then the rate of surcharge is 5%. Students, surcharge come first or HEC come first? Whether the surcharge come first or HEC comes first, students? It is surcharge, students, in this case. So surcharge, students, come first, not the HEC. So what happens is that on the tax amount, those who are not aware of the calculation, there is no shame of this. I told you now, I will assume that your IPCC knowledge is equivalent to 0. So your tax, whatever you calculate, basic tax you calculate, the tax amount, then add to this, students, what? The surcharge. Surcharge would be applied on this. Take the subtotal. Take the subtotal, and on the subtotal, then apply what? The HEC. HEC at the rate of 4% on this. Then you get what, students? The final tax slab. Just take a note of it. As any case, you will be master of it, but nevertheless, it's in the initial sessions. It's always better to recap the steps. Okay. I hope that all of you are clear with this one, so I can proceed now. With your permission, students, let's proceed now, students. Once the rate of tax is over, students, after that, as I told you, you will have the total income. Two things, no? There are two things, students, that you have to be careful about it in this context. Therefore, students, if you see over here now, what is our now focus? Focus is on the total income. Again, this is the AY exercise. Obviously, all these are the assessment year exercise. Na? Computation of total income, computation of tax liability, and filing of the ROI are the events which are of the assessment year. Your assessment year May 24, November 24 attempt is assessment year 24-25. Let's start with the total income computation. Quickly, students, in this case, total income computation, students, how the things has to, in the next page, students, total income. Give the heading, total income in this context. Now, students, total income is been defined under section 2 clause 45. Total income, students, has been defined under section 2 clause 45. Now, students, the definition is, it means, and whenever a definition means something, students, then this definition is an exhaustive definition. This definition is an exhaustive definition. And what it means? So it is a sentence, but I'll just break it into three parts. Okay. Therefore, students, in this context, in this particular context, students, herein, it means what? Three parts. So, part A, students, in this situation. So, in this scenario, part A, students, it means income. That income, students, that income which falls within the scope of section 5 and point number 3, and which is computed in the manner laid down under the Act. The manner laid down under the Act. So, students, whenever I ask a question to all the students, always, that what is total income? So, what is the answer that we all get it, students? Is that, sir, total income is the 5 heads of income, isn't it? 5 heads of income. So, 5 heads of income, students, in this situation, and then thereafter, in this context, what we say, 5 heads of income, then chapter 6 reduction, total income. No, students. What you people are saying, five heads of income and all, that is part C. But before you go to part C, you have to first cross part A and part B. And this is so important for the non-resident taxation that you all are going to learn now, students, in this case. So let's begin systematically, because here we cannot go wrong. And if we go wrong, we would be in a serious trouble, students, in our computation of the tax liability in the case of a non-resident or a foreign company. ICAI in CA final, they are targeting this basic concept, and the students go wrong in it. I'll show you the questions are all there in our modules which will be given. So therefore, you will appreciate all these fine points that I'm going to discuss. First of all, students, tell me what is the meaning of the term income? What do you understand by the term income, students? In this case, what do you understand by the term income? Anything? Income? So, yeah, you one can say that it is an earnings, or another suggestion is that it is an like a, and from any activity, the payment is received. Or maybe, yes, other example that has been given is profit from the business and all. Isn't it? So these are some of the examples which are being there. That's true, student. So these are the examples. But the meaning, when I am putting across it, students, be very careful about its meaning. The term income means, this I'm talking about a general meaning. It means what, students? Any amount which is arising from what? Arising from a source. Any amount which is arising from a source is an income. I'll give you the example and I'll give you the note also, don't worry. Just but understand this core concept. So say for example, what I told you, any amount which is arising from a source. If your source is employment, then salary is the income. We all can say that. If your source is the employment, then salary is the income. That is the point. Secondly, students, if what? If the source is the house property, if the source is a house property, then rent is the income. If the source is the business or profession, then what is your income? Profit is the income. If the investment, if the investment is the source, then capital gains or dividend or interest is the income. What is the source? Investment. What is the amount? Dividend, interest, capital gains. That is an income. If articleship is the source, stipend is the income. So therefore, these are the amounts which arises from a definite source. And because these amounts are arising from a definite source, it will be considered as what? As an income. It will be considered as what? As an income. Students, always keep in mind this particular point. Always, all of you, in this context. Herein. So, one thing, all of you have agreed to this one, isn't it? Now, you tell me one thing. Now, therefore, students, in this case, can I say that because of this two feature, students, can I say that because of these two features, because it is arising from a source, there are two things or two characteristics that can be seen on such amount? Two feature or two characteristics that can be seen from such amount. What are those two feature, two characteristics? One is a certainty that I'm going to get it, an employee who is working with a company, does he have the certainty or not? Yes, that he is going to earn what? Salary. Same is in the case of a house property. The landlord who has given that house property on rent, there is a element of certainty that the amount is going to be received. Same is also with the business person. Same is also for the investment. What is the feature? That there is a certainty that the amount is going to be received. That is point one. And second feature of that amount which is arising from the source, second feature of that amount which is arising from the source is regularity. That the payment is going to be received in regular interval. That regularity can be monthly, quarterly, annually, doesn't matter. But at least there is a regularity also of the pattern in which the amount is going to be received. Regularity of the amount which is going to be received. So certainty and regularity again are the two important aspects, students, in this case. Certainty and the regularity, students, are the two important aspects. That is what is the income. I'll give you the notes, don't worry. This is what is the income that we all know. Fine. Now I give you some important examples. Please pay attention to some important examples, students. I'm giving it to you. What about lottery winnings? Do we have a certainty or a regularity? Do we find this feature so far as lottery winning is concerned? Is there a feature of certainty or regularity in which I am going to earn this amount? No. What about if I give you an example? Amount received on account of a non-compete agreement. Non-compete agreements. Non-compete agreements. One very popular example is of that Mukesh Ambani and Anil Ambani. When these two brothers split, Mukesh Ambani gave to Anil Ambani 5,500 crores. 5,500 crores on the agreement that Mr. Anil Ambani, you are not going to enter into my line of business. Now tell me one thing. Will Mr. Anil Ambani is going to earn these amount regularly? No. So there is no regularity. It is one time receipt. That is it. So therefore, what we just learnt just now about what is the feature of an income. What is the feature of the income? Does it fit in this bracket? These two examples. Which example? Lottery winnings, amount received on account of non-compete agreement. Does it fit in that bracket? No. But you will say, but sir, we remember in inter-CA we have tax lottery winnings. Just now also you in the last two lectures, you are telling us the tax rate. Yes, there is a reason for that. Why we are doing that? You should appreciate the reason. So one thing which right now is very clear from our discussion, that the general meaning of the term income, which is an amount arising from a definite source, which means that that amount should have a regularity, that amount should have a certainty. Only then, as per the general meaning, we will refer that amount as an income. That is what is the important feature. That is what, students, is the important feature, isn't it? But now then, as you all know, students, what has happened in this case? Do you know what has happened? Somewhere back in 1977, the tax rate in India was 97%. Emergency time. You people are not aware of it. 97% in the year of emergency, we had 97% of tax rate. Obviously, tax rate was there. People said that we will not comply. We will not pay the tax. 97% means for 100 rupees is your income. 97 you have to pay to the government as a tax. 3 rupees only you have to take it as in your home. So what the people said? People said that let us not pay the tax at all. What will happen at the most? The government will put it in the jail. At least there is a shelter, security, food would be available in the jail. That is much better as compared to being outside. So therefore there was absolutely no non-compliance. Government came to know that. So this was a structure in 1977. Tax rate was huge, 97%. Okay, and this was your income. This was your income, students. Income was, as you all know, the same thing, amount arising from the source. Let's put a term to this. This income is revenue receipt. What is revenue receipt? Revenue receipt means a receipt arising from a source, from a definite source. Okay, see the structure, huh? 1977. This was structure. But government came to know this is not going to be worked. So what they did, students, because they came to know that this kind of a issue is not going to be workable, then subsequently, in this case, now as you can see today, in say 2023, 24, family, we are having a structure of what? Structure of, in this case, what is the maximum rate? 30% for the individual. 30% was the rate for the individual. That is what we have known, isn't it? 30% was the rate of the individual, whether it was a default scheme or whether it was an optional scheme. But the rate has come down. What about the budget? Has the budget come down every year after year? From 1977 budget and today's budget, you see the huge difference. The budget is increasing of the government. The expenditure of the government is also increasing year by year. So how is it possible that at 97%, what was the rate? And today as the rate of 30%, the budget is increasing. From where the government is getting the money? What they did, the rate came down. What they did? They increased what? The base. This is known as the tax base. What is this? Base means the foundation, the ground. This is the base. So the base got increased. So and how they have increased the base? So the base was widened. The base. This is known as base. B-A-S-E. B-A-S-E. The base got widened. And how it got widened? They have then started, they defined what? Defined income. Students, they defined what? Income under section 2 clause 24. Now, do you know how they have defined this income? Under section 2 clause 24, students, they have defined the word income to include what? Include specified what? Specified capital receipt. Specified capital. So now the example of capital receipt, your lottery winnings. That is a capital receipt. Now, why capital receipt? One time amount, you got it. You don't know whether you're going to get it in next point of time or not. There is no certainty. There is no regularity. So therefore, if an amount lacks these two features, certainty and regularity, then that amount will be referred as a capital receipt. So it's a capital receipt. Primarily. Another example, non-compete agreement. Same way. There is no regularity of that. That every year Mr. Mukesh Ambani is going to pay me 5,500 crores. No regularity. Another example is capital gains. Once in a lifetime you will transfer the asset, you get capital gains. Isn't it? But the government, what they did, the government came to know that few capital receipts are high value transactions. Few capital receipts are what? High value transaction. And therefore, if we can tax that particular transaction, then we will be in a position to get a huge amount of tax collection. If we can tax those high value transaction, then we will have a huge amount of tax collection. But the amount in that transaction is not a income in the general sense. The amount in that transaction is not the income in the general sense. Why? Because it is not regular, it is not certain. What they did, so if it is not an income in a general sense, let's define that amount as an income. So if it is not an income in the general sense, what we are doing it? We are defining that amount. We are defining that amount as what? As an income, students. We are defining that amount as what, students? As the income in this context. I hope that all of you are clear with this one, students. So therefore, they have defined the income to include what? The specified capital receipt. Not all, only the specified. This is what has happened. With the rate coming down, they have widened the tax base. With the rate coming down, what they have done? They have widened the tax base. So the definition of income is not exhaustive. If I ask anyone that do you remember the definition of income in your interest CA, nobody will say. And why they will not remember it? Because if you see, students, there is a huge list of the items in the definition of income. Who will remember it? And what is that logic of that list? So don't remember the entire items list. Remember the logic. What you will find there? There you will find specified item which are essentially what? Capital. And why they have to define that amount as an income? Because otherwise they are not an income. Students, otherwise they are not an income. So if the government wants to tax that amount, then what they have to do? Define that amount as an income. If the government wants to tax that amount, then they need to define that amount as what? As an income. I hope that all of you are now clear with this. All of you are now, students, clear with this. This is all things has to be looked upon, students, in this context. So now today, can I say income in your chart? Can I say what is income then? Income is the revenue receipt plus what? Specified. Specified capital receipt. Where it is specified? In the definition of income. Where it is specified? In the definition of income. Definition of income. This is what the term income means. Please take a note of it, students. First, point number A, income, right? Point number A, income. I'll dictate this thing. The term income as understood, term income as understood in an ordinary sense, in an ordinary sense, is an amount arising from a definite source. Arising from a definite source. Definite, students. Therefore, if the employment is a source, if the employment is a source, then salary is the income. The employment is a source. Then salary is income, comma. If house property is a source, then rent is the income. Then rent is the income. If the business is a source, then profit is the income. If the investment is a source, then dividend and interest. Then dividend and interest is the income. Full stop. Therefore, such amount arising from such amount arising from a definite source from a definite source has two important feature two important feature or characteristics, that is regularity of such amount and certainty and certainty to receive such amount to receive such amount. Full stop. It is called as a revenue receipt. It is called as a revenue receipt. It is called as a revenue receipt. Full stop. Next line, students, write. capital receipt, a capital receipt is an amount which does not contain the above two features. The above two features. And hence it is not considered as an income. Hence it is not considered as an income in the ordinary sense. In the ordinary sense. In the ordinary sense. Full stop. However, in order to expand the tax base, comma, section 2 clause 24, section 2 clause 24, that is 2 in the bracket 24, defines the term income in an inclusive manner. To include within the scope of charge, within the scope of charge, a specified capital receipt. Underline the term specified. Please underline specified. Students, if you want to copy this diagram, you can do this. Copy. Just quickly copy it on this. Through this one, students, now, all of you. Write a statement below. Just a conclusion of this point A. Write a statement below. Therefore, therefore, all the revenue receipts, all the revenue receipts are taxable. All the revenue receipts are taxable unless unless they are unless they are specifically specifically exempted, unless they are specifically exempted, whereas whereas capital receipts capital receipts are not taxable. Capital receipts are not taxable unless they are specifically charged to tax. Unless they are specifically charged to tax. Full stop. Okay, students. This is all of your point number A. Now let's look upon to section 5, students. The point number B. What is point number B? Which falls within the scope of section 5. Very important. So obviously here is the most important, and this is where we are going to start primarily our topic also, non-resident taxation. Students, as you all know, although income, now we all know what is income, revenue receipt plus specified capital receipt. Okay, but as you all know, a person who is not staying in India and he is earning the income in a foreign country, is he going to pay a tax in India? A person who doesn't stay in India, stays in the foreign country, earns the income. Which income? Revenue receipt plus specified capital receipt. Earns his income also outside India. Will he pay a tax in India? The answer is no. He does not make the payment of tax in India. Why? Why doesn't make the payment? Why he doesn't makes the payment of tax in India? This is an important point. This is the focus for our first topic, which is non-resident tax. Why does he not makes the payment of tax in India? Quickly, he is not residing in India. Hmm? He is not residing in India, and in this case, it's a foreign income that he has earned, and therefore he doesn't make the payment of tax, isn't it? The reason that you all are trying to give, may I reframe the state, reframe your answer that they don't pay the tax because there is no nexus of that person with India. There is no nexus. Nexus means connection. There is no connection of that person with India. And because there is no connection or a nexus of that person with India, therefore he does not make the payment of tax under this act. So what is to be seen? The nexus needs to be seen. And how a connection with India or a nexus with India will get established? Either that person is a resident in India. If you are a resident in India, just like you and me, we all are resident in India, so the connection is established with India. Our connection is established. Now, if our connection is established, then irrespective where we earn the income, irrespective where we earn the income, because our connection is by default established with India. Why it is established? We are a resident of this country. So our connection is established in this country. So irrespective of where we earn the income will be what? Will be subject to the charge of tax under the act. The income which we earn as a resident, since we have a connection now with India, therefore the income will be subject to a charge of tax under this act. But if we are not a resident, then in this case, if we are not resident in that case, our income will not be charged to tax under the act. Our income will not be charged to tax under the act unless what? Unless we establish the connection. We establish what? The connection under the act. So unless and until we are establishing the connection under the act, that income will not be charged to tax under the act. That income, students, will not be charged to tax under the act. And how do we establish the connection? By either having a source of our income in India. Either what? We are having a source of our income in India. So, did we establish who are we? Non-resident in my example now. So, either we have a source of income in India, in that case the connection is established, or what? Or if not the source, we are at least receiving our income where? In India. So, either you have a source of your income in India, you means the non-resident has a source of income in India, or if not the source may be outside India, but we are receiving our income where? In India. So this way, we means the non-resident is establishing a connection, a nexus with India, and because of this connection, because of this nexus, the income will be chargeable to tax under the act. Because of this connection or because of this nexus, the income will be chargeable to tax under the act. Is that point clear to all of you? So what is important, students, in this case? The scope of chargeability will depend upon what? The residential status first, and then we decide about how much of the income of that particular person will be charged to tax under the act. How much means quantification, that okay, this much of the amount of this person will be chargeable to tax under the act. That will depend upon what? The residential status of the person. And why residential status has to be seen? We have to see because it is important to check. It is important to check whether that person has got any nexus or connection with India or not. So unless and until that connection or that nexus is established with India, you cannot tax that income. You cannot tax the income of that person. Is that point clear to all of you, students? Please write then point number B. And what are you going to give the header? Income which falls within the scope of section 5. income which falls within the scope of section. Right? Underline that and there you write the scope of chargeability. Scope of chargeability scope of chargeability of the income depends upon depends upon the residential status of a person. The residential status of a person. Full stop. If a person is a resident in India, if a person is resident in India, then his global income, his global income will be chargeable. His global income will be chargeable under the Act. A capital, now students, Act A capital. Under the Act, full stop. However, if a person is a non-resident, if a person is a non-resident, then then unless unless there is any unless there is as there is any territorial territorial as there is a territorial nexus or connection of the non-resident income, territorial nexus or connection of the non-resident income, the non-resident income with India, with India, comma, the chargeability cannot be attracted. Chargeability cannot be attracted. Full stop. The chargeability cannot be attracted. Full stop. Therefore, if a non-resident, if a non-resident either has a source, either has a of his income, source of his income in the bracket accrue, in the bracket accrue, source of his income in the bracket accrue, bracket complete, in India, or he receives his income in India, or he receives the income in India, comma, the connection is not established. Connection is not established so as to attract, so as to so as to attract the chargeability, so as to attract the chargeability. Full stop. Next line, therefore section 5 the most important section is the most important section as it quantifies, as it quantifies as it quantifies the chargeability under the act, based on the residential status of the person. The residential status of the person. Is that point clear not to all of you students? Every one of you are clear with this? Students, this is what is the ultimate point which is there. This regard that we have seen. With that now students, we are in our C point, and which is computed. So therefore, what has to be computed? Now at this stage students, you will have to discuss. Now what has to be computed? When you say now the computation sir will begin. So the question is, what has to be computed students? What has to be computed? So after the first A and B, A plus B students will give you what? Will give you, no, not C. A plus B students will give you a qualifying income. The qualifying income. And it is this qualifying income students that you have to take it where? To C. It is this qualifying income students is going to take it. So not all the income will be computed, because see, for a non-resident it is so important. As far as non-resident is concerned, I just now have dictated to all of you. Only two income establishes the nexus with the act, and the two income are income which is accrued in India, having a source in India means accrued in India, or the income which is received in India. Only these two category of the income of the non-resident is what is chargeable under the act, and that is what you will take it forward for computation. So not all the income of non-resident is going to be charged, and only what is charged will be taken further for computation. Only what is charged will be taken for computation. Just I think May 23 attempt CA final. What these people did in May 23 attempt or November 22, one of the two attempts. What these people did? One non-resident question they have asked, and in that NR question, there were some component of income of that non-resident which was accrued outside India and received outside India. Plus, obviously, there were many component of income which was accrued in India and received in India. But what did I told you? Many component of income was there which is accrued outside India, received outside India. So now you only tell me students in this case, in this situation, whether in that scenario, those income for a non-resident accrued outside India and received outside India, are you going to take it in the competition statement? Answer is no, never. Students, be careful. Remember students, remember inter CA, what we do? Say computation of income. When we write like this, computation of total income of some person, say Mr. A. Of Mr. A, you are doing what? Computation of income. So then you will prepare particulars, amount and amount, like that. Particulars, then amount and amount. This is what you do. Remember the format. Now this is point number C. This statement that you are preparing, which will be a question number 1 in your examination, the statement that you are preparing is point number C. And if this computation of, if this Mr. A, if he is a non-resident, then in this statement, which amount you are going to consider? Only the amount which is either accrued in India or received in India. Only that is going to be considered in the statement, which is point number C. So that full-fledged income under the head salary, income under the head house property, income under the head PGPP, capital gains, or IFOS, then chapter 6A, then total income. What was that? That was step C, point number C. But point number C, you do the computation. Point number C, you do computation only of the qualified income. So if the income is not a qualified income, then you will not do anything in point C. So what you will say, be careful, this is such an important step. Those students, there were two type of students who were wrong in that May 23, November 22 examination. Two categories of students who were completely wrong. Which were those two categories? Category number one, those who forgot that this is a foreign income. So therefore, for a non-resident, a foreign income accrued outside India, received outside India, that should not be taxed. These people have taxed it. That is wrong then. They included in the total income. So they forgot. And for the second category of students whose answers is wrong. Now this is a technical error, I will say. Although the final answer is right, but there is a technical error in their answer. What is the technical error? You know what these people did? That foreign income they included in the statement. Which statement? The statement of the computation of total income. And in that, what these people did, inner column they included in the statement, and then they said it is not taxable. Why? Because it is a foreign income, therefore it is not taxable. I'm telling you, don't try to manipulate this statement. This statement is like your God or a temple. And what will enter in this? Only the qualified income. Who will enter in this temple? Only the qualified income will enter. Which is qualified income? For a resident, world income, global income will enter. For a non-resident, only two category of income will enter into this temple, which is accrued, either accrued in India or received in India. So if it is a foreign income, accrued outside India, received outside India, please don't enter that amount or that particular component in this computation. Never ever 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 include that component or that item in this computation. Which is then, sir, what we have to do? Shall we keep silent? No. What you will do? Make the computation of total income the way I told you now, and then in the notes you will tell the reason why this particular item or the component has not been considered in the computation statement. In the note you have to write this. That then makes your answer technically correct. So that second category of students, what he did, he made that income entered in this statement. In the inner column he write say 10 lakh, inner column, and then less amount not taxable because it is a foreign income, then less 10 lakhs. So outer column it was nil. Outer column of the amount it was nil. The total income was same. But his answer is technically incorrect. Because the computation is the computation is of qualified income. What is qualified income? A plus B. If the income is not a qualified income, in that case it will not enter into your computations, because computation is in the manner laid down under the act, but the computation is of what? Computation is of the qualified income. Okay, so therefore this is what it is. Very important for all of you to remember, students. That exactly is the point. I hope that all of you are clear with this one. Why this is therefore important, students? This is such an important aspect in the non-resident act. Such an important aspect, students, in the non-resident taxation. So students, in this case, in the non-resident taxation, students, in this case, students, therefore, you may write point number C. Please give the heading. Heading is computation as per the manner manner laid down under the Act. Underline this. Then you write computation of total income Just point number one. What to compute? Qualified income. Second is how to compute now below qualified income, students, you can write A plus B. Below this qualified income, write A plus B. Fine, students. And for how to compute, Ram, Rinath, please put out your observation. How to compute? All of you have completed. If you have completed, then put the asterisk below. Put the asterisk below and then write. The total income shall be computed. Total income shall be computed in respect of the qualified income. In respect of the qualified income. Full stop. Since the computation of the total income, since the computation of the total income is undertaken in five distinct heads of income, in five distinct heads of income, and each heads of income has a different mechanism of computation therefore the classification underline the word classification of the income of the qualified income the classification of the qualified income into the appropriate head into the appropriate head into the appropriate head is the most important step is the most important step. Is the most important step. Full stop. The classification of the income into the appropriate head into the appropriate head into the appropriate head is based upon the charging section is based upon the charging section of each head is based upon the charging section of each head. Full stop. The charging section of each head provides charging section of each heads provide the test or the condition as to when the income will be classified when the income will be classified in that head. In that head. Full stop. Next line. Once the income is classified in the appropriate head, comma, the next step of the computation, the next step is to compute, please write, the next step is to compute as per the rules of the computation, as per the rules of the computation provided in that head. In that head. Full stop. What happens after this? After you're done with this one, then what happens? All the 5 heads of income, you have done it. Once you classify, thereafter, whatever is the rules that is given to you in that head, on the basis of that rule, you will do the computation. This exercise you will do for all the 5 heads. And once that is done, what step that you are in? So, just write next line. The above step of classification and computation, in the respective head, is provided in section 15 to section 59. Section 15 to section 59. Full stop. This is, students, actually what I want to see in the first module of the ICI. How much is the extent? We will do this. You don't worry about this fact. So the heads of income, this case. But now the fact that in the new course, May 24, November 24, there are 4 modules which the ICI has said. You see, you go to the website, 4 modules are being shared. Module 1 coming soon. That is what they are trying to say. Module 1 will tell us technically this game. And on that basis, students, I'll prepare my final particular module. First module, students, is now ready primary for the print. Initial lectures, students, I'll be giving you the PDF file. In this case, the first topic. But this is what I want to know, because as I told you, in non-resident taxation, international taxation, 30 marks, confirmed 30 to 35 marks, because I'm taking also black money in my first module. We will do extensive coverage, because this is known that sky is the limit. But you cannot have sky the limit for all the topics. There needs to be somewhere we need to Put a check on it. Otherwise, you'll go mad. Every topic has got a huge aspect of this thing, reach. I can't keep discussing primarily for lectures after lectures after lectures, those topic primarily, and then you find that, sir, we did 30 class, but in 30 class, hardly there was anything that came in the examination. That should not be the case. So we need to know the quantification, the scope. We just not did, this is what we apply. Scope of that topic for the examination perspective. How many case law I need to discuss? What sort of technique I need to adopt? That modification, this modulation is what is very important. So the topic which I'm sure of, family, wherein sky is the limit, that's the topic I'm taking it first, because here we don't have to worry about, sir, are we relevant or irrelevant? Is it there in the syllabus or not there in the syllabus? All that has got no relevance. Everything is there. And I have covered the best of the question and the best of the MCQ students, and you're going to love it. I'm telling you that. The entire journey, in this case, you are absolutely going to go mesmerized with this discussion, and you will take it to the next level. Other topics, we have to be very careful about what to do. And what to do, that is more or less certain through the index, but how much to do. That how much is very important. Otherwise, becoming irrelevant in a direct tax paper is so easy. Isn't it? That exactly the game. So, students, what was the last sentence that you have written? Section 15 to 59. Next line, write. Students, after this next line you write. To check specific case, specific cases, specific cases of specific cases of the abuse, tax abuse, comma, clubbing provisions has been introduced under section 60 to section 65, under section 60 to section 65, as a specific anti-avoidance rule. Anti-avoidance rule. Avoidance rule. In the bracket, write SAR. SAAR. Specific anti-avoidance rule. In your first module, there is a very important topic which is covered. That topic name is the general anti-avoidance rule. That is the general anti-avoidance rule, which is known as GAR provision. General anti-avoidance rule, GAR provisions. This is SAR provision. What's heard of GAR provision any time earlier? In like sometimes in this case. So SAR is there. At the same time, there is a GAR provision also. So, but sir, what is GAR provision? In this case, isn't it? So, students, so far as the GAR provision is concerned, be careful. Let's forget the GAR provision. Think of it, na? Clubbing provision is what? You want to do a tax abuse. Intention is to do a tax abuse, isn't it? What is this tax abuse? My income is 15 lakh, 1 5. Okay. Now what I'm going to do? I'm going to split this income, split between whom? Myself and my wife. I am going to split this income between myself and my spouse. This case, so that I get 7.5 lakhs. She has got 7.5 lakhs. What happens now? That income is saved. Saved from what? Saved from a higher tax rate of 30%. That income, students, is saved. Saved from what? Saved from the higher income of the higher rate of 30%. You all agree to do this one? All of you agree to this one, students? The higher rate of 30% is saved, na? Because 7.5 lakhs, maximum is what? Beyond 5 lakhs, if it is a old regime, old tax regime, 20%. So at least that 30% of higher rate is saved. That's the reason why we have introduced what? The clubbing provision. That's the reason why, students, we have introduced what? The clubbing provision. Do you all agree? That's the reason why we have introduced what, students? The clubbing provision in this case. That exactly is the game, students. Isn't it? This is what is known as, this is, students, what is known as the, the clubbing provision is what? There was an attempt on the part of the SSC to avoid the tax by splitting the income. There was an attempt on the part of the SSC to avoid the tax. Therefore, these set of provisions are known as what? Anti-avoidance rule. So I had, what I was doing? I was trying to avoid what? Avoid the tax. So these provisions attack that arrangement of avoiding the tax. These set of provisions will be known as anti-avoidance rule. And if they are targeting specific case, like clubbing provision, they are targeting specific case, it becomes specific anti-avoidance rule. Specific anti-avoidance rule. I hope that every one of you are clear with this. All of you students, this is what it is. Next line, right, students? After this, next line. Further, the income so computed. Further, the income so computed shall be adjusted. The income so computed shall be adjusted against the provision of section 70 to section 80. Provision of section 70 to section 80, which deals with the set off or carry forward and set off of losses. Set off or carry forward and set off of losses. Full stop. The income so adjusted will result into income so adjusted will result into GTI. What is the full form of GTI? Gross total income. Will result into gross total income. Full stop. Next line. From the gross total income, deduction is provided. Deduction is provided of Chapter 6A provisions. Chapter 6A provision which will finally result into the total income. Which will finally result into total income of the previous year. Total income of the previous year and assessed in the following AY. Total income of the previous year as assessed in the following AY. Total income of the previous year as assessed in the following AY. As assessed in the following AY, full stop. Now students, are you aware of this set of provision? Before that, many of you may not be aware of it. This set of provision has its own history. Because obviously we will not get any opportunity later on to even speak about it. What the historical genesis of this set of provision? How this set of provision was introduced in the law. I'll let you know the story about it a bit briefly. We all know, students, it's a 30% tax rate. The higher 30% is the tax rate. So do you know the best business is the government? Government is the best business. Why? Every year, for the entire financial year, I earn the income. And then what I have to do? In the assessment year, 30% I have to pay the tax to the government. Isn't it? 30% I have to pay to the government as a tax, as his share in my business, in my economic activity. His share is 30%. Although government is invisible, but that invisible force of the government